Hey, what's up, guys? I'm going to be giving a breakdown on how to analyze markets as a beginner, or how you can get to master your master the price action, trading the simple strategy, or just basically simple. Simple doesn't mean it's not hard. What I mean simple is that it's just like it is hard to follow, but it's simple. And with that being said, I want to start today by just analyzing BTC, which is my trade for yesterday. The painful part about this trade yesterday was I quickly moved my stop loss, then he had to move. It touches like I was break even. I closed one trade and the other one was break even. Um, yeah, I just want to be able to like explain things to you in order for you to be able to analyze your trade without having to depend on anybody. So first of all, what I did was as a day trader, I went to 4 hours time frame. So looking at 4 hours time frame, I saw the let me delete this one first. I saw that we had a break and the market was retesting this zone. And I saw this at I think around it was around 12 a.m. my time. It was around here, like and yeah, around this time. And it's 1 a.m. my time. The I'm still up. Okay. So I saw this trade, it was around that 1 o'clock. I think it was around this area. When I saw no, it was around yeah. I saw this trade around 11, 12 or thereabout. And for me, I already saw this move, and I'm gonna explain to you before we get to this point. So basically, the basic things to look out for when you are trading is trade moves. Like for me, the basic things you have to look out for in trading is when you see a trade, you see it moves up, then it doesn't just move up like that. It will come down again to create something like a low. Then again, most times you will see it move this way, then it will come and create a low, then it will create a high, right? So in every single trade, in every single market, there is always buy, and there's always there's always time when markets will sell, right? You have to pay close attention to it, and every of these there is something that drive it. So when the market sell to this downside, to this low, there is forces that made it happen. So it's basically like sellers taking over from the market. Means that people are selling in this area that push the market down. Then same thing happen here. Buyers are selling. Buyers are there are buyers are involved in this area. Then that push the market above this previous old taker here. I'll call this old taker. Then we have this new taker coming to retest the old taker. Then before creating a new taker, and this formerly old, formerly new taker becoming a new old taker. In the sense that what I'm trying to say is that when you see something that happens here, there is reason why it happens. It's basically there are events, there are sentiment of traders, there are buyers or sellers that move the market. So when you understand this, you get to have a sense of understanding on or sense of what triggers any move in the market. Moving forward to having this basic understanding of trend. What I'm drawing to you now is trend. A trend is just consists of we have highs. Let me just type. Uh, okay, so let me just type. Let me just close it. No. Okay. So now we have highs, like I said, we have lows. So, and likewise, if we have the market moving this way also, if we have the market moving this way, oh sorry, let me just, so likewise, if we have the market moving downwards, we always create this will be the high, this will be the swing high. Rather, so let me just use this. This will be the swing high, then this will be the swing low, then swing high, swing low. So in sense that there is always something that moves the market. It's not just moving anyhow. Then when you see a market push down this way, then we should know, or we should be expecting any little retracement before we can continue the downtrend. So the market doesn't, except there's a news or there's any fundamental in the, even when there's fundamental, the market will always respect and create structure, and which is what we traders actually like base our um so let me just delete this. Now on every, like there are other type of there are other phases of trading that we do have. We have when the market is consolidating, market can be moving this way, market can be moving this way. In this way, you have to be careful because there are some times that you want to, like, a lot of people will want to enter in this area, in this exact place where I have this green line, then they want to enter. Like most traders know they want to sell in this area, they want to buy in this area. But the problem is that sometimes the market know that there are buyers in this area. So what we do is that we push the market down below, then to grab, stop loss and all. Then at this point, this is where the sellers will be entering trade and putting their stop loss in this area too. So what would the market do? The market will, after taking buyers out, then it will not go back taking sellers out, then it will end up coming back to this point. Then you have to pay close attention to, like, you have to know it, which is why even when you're trading, you can trade any strategy and be profitable, but what really matters is knowing what you're doing. There are a lot of people trading support and resistance and they're profitable with it. There are a lot of people trading trend lines and they're profitable with it. But what I'm actually like going to teach you in this video is basically price action. There is nothing else but just price action on how you can view the market and let the market tell you what to do. There is this book that I read. It's called The 33 Strategies of War. I'm gonna give you one of the strategy that I use. He said, he said, I'm gonna just give me a minute. There's something he says that he said, pick your battle carefully. So in sense of having to picking your battle peacefully, you have to be able to, like, you have to know your enemies, you have to know your opponent, somebody you're facing. And in this aspect, in this industry, the only enemy, you have two enemies actually. You have like you have enemy with yourself, and wholesale, you have enemy with the market. So you have to be able to understand yourself and also understand the market. So, and when you declare a war with yourself, it means that you have to change some things, some old ways, just like the Bible said we should, like Jesus said we should repent. It's still having to come down to like knowing your, it has to come to like choosing your battle carefully in time of trading, and I'm gonna show you how. Or should I type it? Or let me just type it. Choose your choose your battle carefully. So in the sense that I'm gonna like go right into it and talk more about it, but hopefully you guys will understand what I'm trying to say. Now then there are other things that I have to say too. In this consolidation session, right? There are also times that the market will be giving you higher high and higher low in this area. I just want you to know that a lot of people don't know this. There are times that the market will be giving you higher high and higher low in this area. So you have to be able to, which is why I said you have to be able to know what the market is saying so that you can capitalize on it. A lot of people, we enter in this area, we we enter in this area, we enter in this area, but for me, I don't want to get in early. I just want to get in when the move is actually happening, when it's at least 50% or 60% assured that it's gonna move the way. So this is just the basic understanding on how things work, right? Then likewise, like I said earlier, that sometimes when the market is consolidating for about, let's say, 100 pips or 200 pips, there are moves like this that you can actually like captured, that can give you like, money you can make without having to wait for trends. This also is called trend. It's called mini trends on the range market. So I'll probably show you an example of it. Let me think of an example. Let me show you an example of this. Let me go to UJ. Let me go to UJ. Let me go to UJ. Okay, so I'm gonna pick this area. See this area as a resistance level. Then we have this as a support, as a floor. Okay, you can see what I'm showing you right now. You can see how many times the market has tested this zone, then the support level. You can see how big the support level is. So now let me give you an example of the trend line I was talking about. The trend, the mini trend in so we have the market. So first of all, let me just okay. First of all, we have this market creating W pattern like this. Higher high, higher low, higher high, then we expected the new higher low here for the market to, but instead this is what the market did. The market broke it, came down, then retested, then start creating another lower high and lower lows, then boom. Okay, let me change this color to like color that you guys can see. What color should we do? Should we do black? Okay, I think black is good. Okay, so like I said, these are higher high and lower highs and lower low, higher high and higher high and higher lows. So in sense, you can also see the same thing here that I was trying to like say. We can see how the market from here creating higher high, then we have a new higher low, sorry, a lower high and lower low, lower low, lower high, then lower low, then lower high, then lower, lower low, lower high, lower low, then it got broken again. So after it got broken, so this is another retest. So in this sense, you will understand that even in some zones that you can actually get higher highs and higher lows. So it doesn't matter having you to wait to, like, okay, you want to wait for a long period, like you want to wait for a particular trend, because it might not happen on these days. Like, I will tell you one thing, the market has been consolidating for how long? Let me just delete this first. Let me just delete this. Let me delete this one also. Let me delete this one. The market has been consolidating in this area for how long? Since July. It started since July, and now we just broke above it. October, July, August, September. That's 4 months. So imagine you having to, like, a lot of people will be saying there's no signal, there's no trade, there's no signal, there's no trade. There are trade, is just that you're not, like, paying attention to what is actually happening in the market. So, with that being said, let's go back to the drawing board. Let's go back to the drawing board. There's two phases. We, trade, you know, trend, higher high, higher low, higher high, higher low, like this, right? Then going back and forth again, we have also, I don't know, I can reverse that. I would love to. So it just save me from this stress. Not stress, actually. It will just save me from this hard work that I'm doing. Okay. So now we have the uptrend and we have the downtrend. So on the uptrend, we have higher highs and higher lows. Then on the downtrend, we have lower low and lower highs. And I don't know if I should write it, but I might just do it. Higher high. It's called higher high. Then I'll just do another one here. Then it'll just be lower. Okay, sorry, just be higher low, higher low. Then another one. We have to do lower low, lower low. I will try to see if I can explain this lower. And we have a low. Sorry, we have lower high and we have lower low, lower high. Okay, so perfect. So every single time the market is on a downtrend, it will always create it will create a lower high and lower low. One of it means that this is the highest part of this downtrend. Then the lower part is this. It's where the market touched before it went up to, like, for a little retracement. So what I'm gonna do here is what did I do? Okay, I think it's just trying to. Okay, I hope it makes sense now. Okay, so on this, I have to clone it. I have to clone it again. Just want to clone it so that I can have more. Okay, I have one more here. Okay, then clone this one. Sorry, just gonna, it might take time, so just. Okay, so whenever we are trading, like, the market is on a downtrend, there's always higher high and higher lows and higher high and higher lows. And when things like this happen, it means that that's when we get to know that the market is on a downtrend, and that's when they say the market is dipping or something like that. Then when the market is trading up, we call it uptrend. That's when we see higher high. It means that something that is getting higher. Then we have this higher high, higher high, higher high. This was the previous higher high, and now this one is higher than the previous one, and this one is higher than the previous one. Then we have higher low. Higher low is just that, okay, this one is higher than this one. Sorry, this one is higher than this one. Then we have another one. Then we have another one. We have another one. Okay. Then we have another higher high. Then we have another high high. Let me just. Okay. Looking at this right now, you can see how the market is. Then, based on how I trade, it's always good to have or to notice this, because this is what really give you money in the market. You don't want to be trading when the market is in a shopping zone where it just goes up, it doesn't move. When it moves like this is what you want to avoid. You want to avoid not trading on this particular time, because it doesn't make sense. It's just a shopping time, and then people lose money in this area. I've lost money, and I'm just giving you my knowledge on things that I know about this. Now fast forward, let's move to how do I now capitalize on every single time of this. If you realize that, like I said earlier, that when the market gets here, it goes higher. When it gets here, it goes higher. When it gets here, it comes down. When it gets here, it comes down. When it gets here, it comes down. Then your job is to be like, okay, what happened? Or you should be curious, like, what happened that makes this thing to go up? Why does it go down? Why does it have to? When, and why, and what make it to act this way? So these are the questions that you always should ask yourself as a beginner. But I'm going to also dive deeper by saying that when things like this happen, what me I do basically is having to find a good opportunity at a strategic place, which is this area where it's retesting the old taker highs, the higher highs. When it reach that higher highs, it's what we call area of interest, or we call it we call it area of interest. We can also call it um, a key zone. So these are key zones. Every area, these are key zones. These are key zones. These are key zones. These areas. These are key zones where the market is retesting. So I might delete some of it, but let me just delete this. Let me just delete this. Okay. So this area, the highs and the lows areas are what is called key zones, and this is what you have to look out for. Let me rephrase this now. I want to tie something. In the market, what I look for basically when I start and when I come to the market is I have to look for area of interest on 4 hours and 1 hour time frame. Uh, Key zone. I'll just click keys points for day trading. Then number one, I look out for key zones. I look out for key zones. You can also call it area of interest. area of interest. What area of interest is just like a place where the market will is possible to there's possibilities there will be a reaction in that place, which is what I already drew for you in this area, which is the higher highs and higher lows. And remember when I draw like the support and resistance where the market touches the highs and the lows, that is one of it. And number two, if I'm going to continue, I look for I look for the okay. So number two, I look for the confirmations. I look for the candle candlestick patterns. I look for candlestick patterns. I look for candlestick patterns. But before I look for candlestick patterns, I do have to look for, when I'm looking at that area of interest, I have to know what market condition are we in. Is the market consolidating, or is the market, let me just put it this way. Uh, I'll put that as number one. Let me just delete this. So, in this key point for day trading, what I basically look out for, I look out for my bias in the market. Bias is just basically means are we trending or are we consolidating? And in that consolidation, are we having many trend in that consolidation zone, or it's just basically like a shoppy? Like I said earlier, are we trending? Is the market going? Is it printing higher and higher lows, or is it just like just giving us this consolidation zone, something like this? And remember what I also said there, in consolidation zone, in some consolidation zone, markets always create higher and higher lows in those areas that we can capitalize on a shorter move, not a long time one, because it never lasts. So without being said, we have to know our bias. Bias is just like, where is the market heading to? Is it on a downtrend, uptrend? Is it consolidating? Once we get on there, we move on to our area of interest. Area of interest, or you call it key zones. Key zone and area of interest is just basically where the market is possible, what is possible for the market to react. Yeah, like what I mean is all this area when the market's like, if after let's assume now that the market is this way. Let me just delete all this. Let me just delete all this stuff. Okay, so let's assume now that the market is is we find out that the market is giving us, we have about two highs and the market is somewhere here. The market is somewhere here. He hasn't gotten to this point. He hasn't gotten to this area. The reason why I mark this place is because it's the area of interest. It's the previous high where we're expecting the market to reach. If it doesn't reach, you can't enter trade because it will be more like invalid, because the reason why, because he hasn't gotten to the area of interest. This is where there's not, unless there's something or there's a support resistance in this area that could make the market to just go up from this area. But without it, there's nothing that can be done. There's nothing that can be done. You just have to wait until you get to the area of interest, because this here, right here, has higher chances of he going up from this area. It has higher chances of him going up than here. And in many occasions, I've had like many time where the market will get to this point and we end up breaking. So you also have to be careful because your money is on the line. So moving on is this area is area of interest, and when you are dealing with support and resistance level, also, let me go back. Okay, so when you do area of interest, like when support and resistance. Okay, so the support and resistance are also area of interest or key zone, because the market is possible to react whether it's going to break below or above it, or it's going to respect it. Is always a place where you should be looking out for. So I hope that makes sense. So now coming to the next one. The next one I look out for is I look out for, it's just three things. I look out for my entry sickness. So this is where I get to enter trade, and we're going to discuss it now. So I hope you understand that now. You understand what bias means, and you understand where what area of interest and key zones means. Then I'm going to just um I'm just go to my entry signal right now. So remember I told you I enter a trade on I enter a trade on BTC USD, and I'm gonna break down the trade for you guys. So looking at 4 hours time frame, we can see that just like I told you earlier, there. Okay, the market has been giving us. We have a push, then we have a retest, then we have a push, then we have a push, we have a retest. So what is happening then? But what I'm gonna explain to you is that the market, I saw that the market was retesting a particular zone, which is our previous higher high. Then what do I explain to you in the previous video, that when the market gets to the higher high, that's the area of interest, we should be looking for a buy, not a sell. Or even though the market will sell in that place, he will rather, like, let me just put it this way. There are sometimes the market will sell even when it gets to the highs. Something like this, I'll show you. Something like this. Then the market will sell. If it gets here, then it can just do something, then it will still go like this. Don't get me wrong. Here it means that the trend is not invalid anymore until it's gonna break this place. The trend is still valid because we can still use it as a trend. Then the market might come to this point and just break. Then once the market break this structure, to me, you have to know that, okay, now the uptrend is not valid anymore. The market was going up, now it's indicating that it's coming down. So your job is just to switch from your buying bias into your sell, into sell. Moving on, I saw this on 4 hours time frame. I went to 1 hour. Then 1 hour was way clear. Then for me, what I now I have my bias. Bias is the market is bullish. Then I have my area of interest, which is the 4 hours time frame and 1 hour time frame. So one thing you have to also take into account is that always know this and put this in your mind. Then whether you're a day trader or you're a swing trader, you have to have two-hour time frames that is aligning with your bias. What I mean is that if 4 hour time frame is buy and 1 hour time frame is not buy, then there's a problem. But if 4 hour time frame is buy and it's testing a a support level where it's gonna buy, and 1 hour is doing the same thing, then you have high chances of winning or making money from that trade. The reason being is that you have two, candlestick confirming your move, so it's not just one. Then with the alignment with your smaller time frame, like 15 minutes, 5 minutes time frame, then you're on the right path. Moving forward to moving forward to hold on, guys. So moving forward to this now, I how did I enter now? So now I move to like smaller time frame, 15 and 5 minute time frame. That is the exact time frame that I use in entering my trade, because it helped me to lower my it helped my stop loss to be low. And I entered this in a very nice place. I don't know who sent me to just go and put my stop loss, but I'm just gonna explain in a bit. So again, now let me move back to the trend line that was I drew earlier on UJ. Let me just go to 1 hour. I'm having like running stomach since where are they? Okay, so I think let's just go to this place. Okay, okay. So now let's draw our trend line. Let's draw a trend line. Okay, so this is our trend line now. This is how the market is. In this area, I don't know what's going on. What did I do? Okay. We are seeing trend now, right? So now our job, or your job, what you should be looking for you to be able to sell. Okay, a lot of people will sell when the market get to this. They will buy when the market get to this point. Then guess what happened? The market will wick them out. Then it will now go. You don't want to be victim of that. It's called liquidity. It's called surplus hunt. And you don't want to, because there are a lot of activity in this area. What is liquidity? Liquidity is just a form of help I say liquidity is where buyers and sellers are. It's like a battlefield. It's like a battlefield where buyers and sellers are just where they're waiting for the market. Like it's like you will know everybody are waiting for the market in that place. Like I said, people are just like so, and the market maker, they know that people are waiting area, and that is where they can actually take money from new beginners. Some they can take money from dummies and all. That is where they're waiting for. So what they will do is, instead of the market reacting immediately, it can come and push to this area. Then only you, who doesn't understand this kind of thing, we know you will fall a victim of it. So what my strategy will do is, what I look for in this area is, okay. So what I look for in this area is, on a smaller time, like 15-minute time frame, I'm gonna wait for the market to start creating like smaller, like small higher highs and higher lows, higher highs and higher lows, and higher highs and higher and higher and higher. So what I'm gonna do is, I'm not gonna enter right away. I'm just gonna wait for the market to start shifting from that bullish momentum, sorry, from bearish to now creating, to now creating candle indicating. For me, I use WU pattern, and I use head and shoulder pattern on a smaller time frame. So having to see that is where I'm probably gonna enter my trade. So uh I don't know what this thing is doing to me. Oh. Why is it still like this? I'm trying to understand. Okay, okay, let me just put this there. Okay, so let's just use this. Okay, so now I'll be let me explain this again. Let me explain this again. This is a market. Okay, so we are expecting the market to go up, or we're on a uptrend. but we need the market to come and retest this particular area of interest, which is the previous higher high. Then what we need to do now is that we have to wait for the market to start. Like sometimes you will see the candle can be so strong, then it was like you don't want to catch a falling knife. You have to let, like, you can't cash it, like, because you can get injured, get caught, and nobody to be held accountable for it. So what you want to do is that you wait and see, and wait for the momentum of the market to change, to start changing from buy. You see the market start weakening, they will start changing their movement like this. Then you come for a retest. Then after a test, boom. So for me, I don't get to enter right immediately, so I don't get weak out. I enter immediately after the market starts shifting. Then what is going on with this? Okay, so I just put it this way. Okay. So for me, I enter this way. Then my stop loss would be below this area. So anything that make the market to reverse back, I know that the trend is not valid anymore, because I didn't enter when the market was up. I enter when anything that may, unless maybe there's a news and it just give me a week and then move. Anything that make the market to just go below this area, I know that's going is coming down to a new low, then which means that maybe the the trend is over. But without that, this is what happened. This is what happened. Um, I hope this makes sense. Um, let me just. I hope this makes sense, guys. So this is what I do. Look for every single day, and here coming to this gold, coming to this BTC USD on 15-minute time frame. I will show you what I sell. So on 15-minute time frame, we can see how the market, you can see the bullish and the bearish candle was so strong. Imagine you having to enter here. Look at what will have done. It will have taken you out somewhere around here. So what I did was just, okay, wait for the market to shift to momentum. Then the market start, creating these. You can see these smaller candles start creating it. Not yet, you have to wait, just patient. It requires patience. See, then we have this, then we have this, then see the WE pattern. Then immediately after it broke above the highs of the patterns, what I did was I didn't even just wait, I just enter right away. Then it gave me about, I think, 1 to 2 or 1 to 3. I took profit here, then I waited. Then this was, I should have left, like, my stop loss was still here. I should have left everything. It didn't even come to my stop loss. I just moved to the break even. See, it tapped on the break even, like on my trade. Then immediately after that, see what happened. It would have been it was still a good day because it was a good trade. So I hope you understand this. If there's anything you would like me to do, you can just comment down below. And my own is just to, tell you what I'm seeing in the market and help you become a better trader. Hopefully you can get to analyze trading for yourself, by yourself, and not having to depend on anybody or signals. With that being said, my name is, you can call me Chesson, you can call me Mosh, you can call me FX. With that being said, I will see you in another video.